Hi, I'm Darius McDermott from Fund Calibre, and today I'm delighted to be joined by Matt Jarvis from Legal and General to discuss property.
Hi there.
Property funds have been through the mill a number of times, but the pandemic has caused some more interesting aspects with property funds, which suspended in March. Can you tell us briefly why that happened?
Yeah, certainly. So it's basically a property valuation issue that's caused the funds to suspend back in March. When property values are deemed to be uncertain by the independent valuers, then they elect to caveat their valuations with a material uncertainty clause. And under current regulations, if an open-ended fund like the L&G UK Property Fund or one of the others in that sector have more than a certain percentage of assets that are covered with this caveat on the valuations, a material uncertainty clause, then they're required to suspend on the basis that the price of the units isn't regarded as certain, and therefore if investors were to trade on that price, it would be potentially unfair for some investors. So that's really what triggered the suspensions back in March.
But that has recently reversed, hasn't it? The sort of material uncertainty clause. And does that mean property funds can open again and then stay open?
No, that's right. So as time has progressed since March, the markets have become more visible to the valuation community. And slowly but surely, the valuation community have taken the clause away, starting with things like the industrial market, where there's lots more activity. And then finally, with the retail and leisure markets, which were released recently. Now, ultimately, that has led to a significant proportion of the funds now capable of reopening because of the low levels of material uncertainty on the valuations. Now, the funds have to make a choice to reopen. Their governing bodies need to elect to reopen on the basis that they are not just comfortable that there's low levels of uncertainty, but that they're comfortable they have enough liquidity in them, and that they're comfortable with the valuations that they are seeing. So yes, the funds are generally capable of reopening, but so far we've only seen a small number that have actually taken that step.
And you mentioned liquidity there, and that's obviously a key issue with property funds, and also why the regulator is looking more closely at them, because there has been a number of suspensions in recent years, not for all funds, but for certain funds in the sector, and normally it's been liquidity reasons. What are the FCA sort of looking at, and how do you think that might pan out for open-ended property funds?
Well, certainly, just to start with, in terms of clarifying on the question, that yes, there have been some suspensions. I wouldn't say it's been widespread. You're absolutely right. There have been the occasional one that's based on liquidity, but most of the ones in recent memory have been as a result of uncertainty. And so the two issues are a little different. But nonetheless, while this current uncertainty-based suspension has been playing out, the FCA have elected to engage with the public to consult with them around the possibility of introducing notice periods on funds like this. The idea being that by having notice periods on redemptions, it would perhaps reduce the risk of liquidity-based issues, because the manager would have a little bit more time to react to a sudden change in sentiment, a sudden change in flow. Now that consultation is ongoing. We're certainly going to be taking part in that consultation, and we're suggesting to all of our investors that they should do the same to make their views known about how that affects them, what the pros and the cons are from their perspective.
So you talked about rent and tenants. How has that been over this difficult last 6 months?
I think in the whole, it's been a very positive experience. It's really been a test for how we engage with our tenants and a test of the strength of the relationships we have with them. But in the whole, I think our rent collection has been strong and has been getting stronger in recent quarter. At the start, we engaged with our tenants to make sure that they were capable of survival. We had discussions with those that were cash flow challenged, and made sure that we engaged with them to agree rental repayments at a speed that they could afford. And that's really helped to make sure that they can survive all this and be with us for a much longer time. The last quarter, so the September quarter, we started to see the rent collection rate increase further back towards more normal levels, and we're pleased with that.
Matt, thank you very much for your time this morning. For more information on investing in property, please visit fundcalibre.com.